All right, welcome to The Explainer. For more than half a century, one name has been totally synonymous with Berkshire Hathaway, Warren Buffett. Well, that era is now over. Today, we're diving into the pretty stunning earnings report that marked his final quarter and what it might tell us about the future of this legendary company.
So this is the headline that really got everyone talking. In his very last quarter at the helm, Warren Buffett's Berkshire Hathaway saw its core profits take a nosedive. So what's the deal here? Was this just a final stumble, or is it a real warning sign for the company he's leaving behind?
Yeah, a 29% drop. That's a huge hit to the profits from Berkshire's actual, day-to-day businesses. But to really get a handle on whether this is a big deal, we have to see it in context. The context of one of the biggest leadership changes in business history.
Right, so that number, it doesn't just exist in a vacuum. This wasn't just any old quarterly report. This was basically the final page of an entire chapter of American business. Look, this whole transition has been really clear, really deliberate. After Buffett announced he was stepping down back in May 2025, his last quarter wrapped up the year, and now Greg Abel is officially in charge. So this earnings report feels like more than just data. It's kind of like the official handover document.
Okay, so what exactly is behind that 29% drop? Let's get into the specifics and see what the report is really telling us.
When you look at the raw numbers, the drop is pretty stark. We're talking from over $14.5 billion down to just over $10 billion in 1 year. That's a $4 billion gap. But to understand it, we've got to be crystal clear on what operating earnings actually means.
And honestly, this is a super important distinction to make. This isn't about whether the stock market went up or down. Operating earnings, that's a measure of the health of the actual businesses Berkshire owns. The railroads, the insurance companies, the retailers. Think of it like the engine room of the whole empire.
You know, with a company as massive as Berkshire Hathaway, a drop this big usually points to something specific. And in this case, the report points a very, very clear finger at one major part of the empire.
And boom, here it is. This is where the problem was. Berkshire's huge insurance division, which is really the financial heart of the company, got hit with a 1-2 punch. First off, their underwriting profit. That's the money they make just from selling insurance policies. That plummeted by 54%. And on top of that, the income they earned from investing all those premiums, that also dropped 25%. Yeah, when your main engine sputters on both cylinders like that, you are definitely going to feel it.
Okay, so a 29% drop sounds pretty alarming, right? But here's the thing. Anyone who follows this company knows that with Berkshire Hathaway, you always have to zoom out and look at the bigger picture.
And that leads us to the, multi-billion-dollar question for anyone watching. Was that 29% drop just a temporary blip, some kind of statistical weirdness? Or is this the start of a worrying new trend for the company after Buffett?
You know, it's funny, because Buffett himself has warned people about this kind of short-term thinking for years. This quote actually shows up in their earnings reports for a reason, to remind everybody that focusing on one quarter's results can be, and I'm using their words here, extremely misleading. So to get some real perspective, we have to zoom way out and compare this one quarter to the 60 years of history that Buffett built. And this is where the numbers just get, honestly, mind-boggling.
Okay, let's start with this number. 19.7%. That's the average return Berkshire delivered to its shareholders every single year since 1965. We're talking year in, year out, for almost 60 years. Incredible.
And here's what happens when you let that kind of growth compound for 6 decades. You get an overall gain of over 6 million%. It's a number so huge it almost feels fake, and it's without a doubt one of the greatest stories of wealth creation in history. And to really, really appreciate that performance, you have to put it up against the market itself. Berkshire's annual return almost doubled the S&P 500 over that same 60-year period. That's not just good, folks. That's legendary. This is the track record, this consistent outperformance that made Buffett who he is. And all that success, it built this, a fortress of cash. We're talking over $373 billion. This is way more than just a rainy day fund. It's a massive war chest that gives the company unbelievable power to get through tough times and jump on new opportunities.
Which brings us right back to today. With that incredible history and all that financial power as the foundation, what happens now as Berkshire starts a brand new chapter?
So who's the guy taking over? His name is Greg Abel. He's a total Berkshire veteran. He ran the company's huge non-insurance businesses for years. He's been Buffett's hand-picked successor for a while, but now he's the one in the driver's seat.
And in his very first message as CEO, Abel sent a super clear signal to investors: don't panic. He basically vowed to stick to the Buffett playbook: keep the company financially strong, be smart with its money, and always, always focus on long-term value. The message is simple: continuity.
And so here we are, left with the ultimate question. That 29% drop, it might just be a blip. But the change in leadership is permanent. Was the magic all in the man, in Warren Buffett himself? Or did he manage to build a culture that's so strong, so deeply embedded, that it can actually outlive its creator and keep on winning for another 60 years? The whole world is watching to find out.